Hey, everyone. Thanks again to Quincy and his research team for all their work. You guys are awesome.
Yeah, they really outdid themselves this
For
time.
sure, for sure. So today we're bringing you a Canada news summary,
All right.
and we're going to break down some insights about where the Canadian market might be headed in 2025. I'm Mike,
And I'm Jane.
and we're ready to unpack some predictions from IG Wealth Management's Chief Investment Strategist,
Oh, yeah.
Philae Peteron.
I've heard of him.
So Peterson was featured in a recent BNN Bloomberg interview, and to put it simply, he's feeling pretty bullish on Canada. He's projecting the TSX to hit a whopping 28,000,
Wow.
which is significantly higher than where it's at right now.
Yeah, that caught my eye, too. It's interesting because his reasoning isn't just based on blind optimism.
Right.
He's factoring in earnings growth, potential valuation increases,
Yeah.
and the reliable dividends that Canadian companies are known for.
And here's where it gets even spicier.
Uh,
He thinks the TSX is actually a more attractive investment compared to the US S&P 500 right now.
wow.
That's a bold statement.
Especially given the usual dominance of the U.S. market,
Right.
he's really placing his bets on Canada. One of the things he points to is this idea of a steepening yield curve. Now, I know that sounds like financial jargon, but it basically means longer-term interest rates are rising faster than short-term ones.
Okay.
This is good news for financial institutions like banks because it widens the gap between what they pay to borrow money and what they earn by lending it out of bigger profits.
So essentially, a potential win for the banks.
Yeah,
But what about the elephant in the room of a potential recession in Canada in 2025?
right.
There's been a lot of talk about that lately.
Yeah, Peterson doesn't shy away from it. He acknowledges the slower economic growth we've been seeing and the mortgage cliff looming in 2025, where a lot of homeowners will be hit with much higher mortgage payments as their fixed rates expire. This could definitely put a dent in consumer spending.
Okay, so not exactly sunshine and roses,
Yeah.
but I'm sensing a but coming here.
Yeah. Exactly. While he acknowledges these challenges, Peterson is still leaning towards optimism. He highlights the strength of the U.S. economy, which often spills over into Canada, especially for our banks that have a strong U.S. presence. And going back to what we talked about earlier, that steepening yield curve could also work in the bank's favor. So there's a bit of a balancing act at play.
So we've got potential headwinds, but also some factors that could help cushion the blow.
Precisely. It's not a black and white situation, which makes it all the more interesting, right?
Absolutely. And speaking of interesting, Peterson also had some intriguing things to say about the energy sector, specifically oil prices.
Oh, yeah.
He believes oil has likely bottomed out around the 70-80 per barrel range.
Interesting.
I'm curious, what's his reasoning there, especially given the global push towards renewable energy?
That's a great question, and you'd think with the shift towards renewables, oil would be on the decline. But Peterson has a different view. He's looking at the continued global demand for oil, even with OPEC lowering their projections for 2025. He also thinks energy companies are currently undervalued, making them a potentially attractive buy for investors.
Okay.
And let's not forget the dividends and share buybacks that these companies are increasingly focusing on, which can sweeten the deal for shareholders.
So a potential opportunity for those who believe in oil's staying power, at least for the foreseeable future.
It seems that way, but of course it's always important to do your own research and assess your risk tolerance before jumping into any investment. Now, another key aspect Peterson touched upon was interest rates.
Right.
He's predicting the Bank of Canada will reach a terminal rate of 2.5% in the latter half of 2025, while the U.S. Fed is projected to reach 3.5%.
Okay.
That difference is pretty significant.
Yeah, why such a disparity?
Well, according to Peterson, it all boils down to inflation. He believes inflation will stick around 2% in Canada, while the U.S. could see rates closer to 3%. He attributes this partially to tariffs potentially impacting U.S. prices.
So basically, the differing inflation rates, coupled with the different economic outlooks for both countries, are leading to these divergent interest rate predictions.
Exactly. And this also ties into another one of Peterson's predictions, a weaker Canadian dollar potentially reaching $0.68 USD.
Now, that's something that could have a ripple effect across the entire economy.
For sure.
But before we dive into that, let's bring it back to our listener, given all this information. What's Peterson's overall advice for investors looking to navigate the Canadian market in 2025?
He's advocating for a slightly more defensive approach, acknowledging the potential for volatility due to all the economic and political uncertainties we've discussed. However, don't mistake this for pessimism. He's still quite optimistic about stocks projecting growth in the mid to upper single-digit range, particularly in the Canadian market.
So a cautious optimism with a particular fondness for Canada.
You got it. He specifically recommends shifting some U.S. holdings towards Canada and allocating more to fixed income, which can provide more stable returns in potentially turbulent times. He really seems to see a lot of untapped potential in the Canadian market, especially with the potential for a weaker Canadian dollar.
That's quite a lot to digest.
It is.
But what I'm hearing is that while there are definitely some challenges on the horizon, Peterson believes the Canadian market has the potential to outperform expectations in 2025.
Exactly, yeah. It's definitely a landscape full of potential, but also with its fair share of complexities.
Mm-hmm.
Now, let's delve a little deeper into some of the specific sectors that Peterson believes will thrive in this environment.
Okay.
He had some particularly interesting things to say about financials,
Oh, really?
which I found surprising given the potential recession and mortgage cliff we discussed earlier.
Yeah, I was surprised by that too. It seems counterintuitive to be bullish on financials when those headwinds are looming large.
Right, but Peterson's reasoning is that Canadian banks, especially the big players, have significant exposure to the U.S. market,
Okay.
which could act as a buffer if the Canadian economy takes a hit. Plus, as we mentioned before, that steepening yield curve we talked about can actually boost their profitability.
Wow, I see. So he's betting on the bank's diversification and the potential benefits of rising interest rates to offset those risks.
Exactly. He's not ignoring the challenges, but he's weighing those against the potential upsides. Now, another sector Peterson is quite optimistic about, and this one might be a bit more expected, is energy. Specifically, he sees opportunity in oil and gas producers.
That aligns with his prediction about oil prices bottoming out, right?
Precisely. He likes the current valuations of these companies and their focus on returning value to shareholders through dividends and buybacks.
Okay.
However, he does caution that the energy sector is inherently cyclical and can be quite volatile.
So not for the faint of heart, perhaps.
Probably not the best fit for those looking for a completely smooth ride. Now, this next sector might surprise you, and I admit it even caught me off guard a bit: technology.
Really, Canada's tech scene, while growing, hasn't traditionally been seen as a global powerhouse.
Right.
What's Peterson's angle here?
That's the common perception, but Peterson sees things differently. While we might not have, the tech giants of Silicon Valley, Canada, has a vibrant and growing tech sector with a specific focus on artificial intelligence, and this is where things get really fascinating in his view.
Okay, color me intrigued. How does AI factor into his overall outlook for the Canadian market?
He believes AI is going to be a transformative force, not just for the tech sector, but for the entire economy. He sees Canadian companies, particularly those specializing in machine learning, data analytics, and software development, as being well-positioned to capitalize on this AI revolution.
So he's essentially saying that investing in Canadian tech, specifically those with an AI focus, is a way to ride the wave of the future.
That's the gist of it, and he's not alone in this assessment. Many experts believe that Canada has the potential to become a global leader in AI. We have the talent, the research infrastructure, and a supportive government framework.
It's exciting to think that Canada could be at the forefront of such a groundbreaking field. But let's be realistic. Are there any sectors Peterson is less enthusiastic about for 2025? After all, not every sector can be a winner.
He doesn't explicitly name specific sectors to avoid. Instead, he emphasizes the importance of being selective and doing your due diligence.
So a reminder to be discerning and not just blindly follow the hype.
Exactly. Don't just jump on the bandwagon. Really understand the companies you're investing in. He also stresses the importance of diversification, both across sectors and asset classes. This helps to spread the risk and potentially cushion your portfolio from any unexpected shocks.
That's classic investment advice. But it's always worth repeating, don't put all your eggs in one basket, as they say.
Absolutely. Now, while Peterson is generally optimistic about the Canadian market's potential, he's not wearing rose-colored glasses. He acknowledges that there are potential risks on the horizon.
Right. It's important to be aware of those potential storms brewing, even if the overall outlook is sunny. What are some of the things he's concerned about?
He points to the possibility of a global economic slowdown, geopolitical tensions, and the persistence of inflationary pressures. These are all factors that could create volatility and uncertainty in the markets.
So even with his overall bullish stance, he's reminding us that it's not going to be a straight line up.
Exactly. Investing always involves a degree of risk, and it's crucial to be prepared for those bumps along the way. So we've covered Peterson's outlook on various sectors, the potential risks, and the importance of diversification. But what does this all mean for individual investors? What key takeaways should our listeners be considering as they navigate the Canadian market in 2025?
It feels like we've covered a ton about what Peterson sees for the Canadian market in 2025.
Yeah, definitely a lot to unpack.
So after all this, what's his main message for everyday investors like our listener?
He boils it down to a few really practical points.
Okay.
First and foremost, stay informed. Keep up with market trends, economic data, and what's happening geopolitically. The more you know, the better equipped you are to make smart decisions.
Makes sense. It's easy to get overwhelmed by the constant flow of information, but staying engaged and informed is key.
Absolutely. And sometimes it can be helpful to get a second opinion, which brings me to a second point. Don't be afraid to seek professional advice. A financial advisor can help you personalize your investment strategy based on your own risk tolerance and goals.
I can see how having an objective expert in your corner could be invaluable, especially in a potentially volatile market like the one Peterson's predicting. But finding the right advisor is crucial. How can our listener make sure they're getting advice that's truly in their best interest?
That's a great question. Do your research, ask for referrals, and make sure you feel comfortable with their approach and communication style. It's a partnership after all.
Yeah.
Now, Peterson's third point is perhaps the most important. Stay disciplined. Don't let your emotions drive your investment decisions. Stick to your plan, even when the market throws curveballs. That can be tough when things get turbulent, but it's essential for long-term success.
Oh, I know that struggle all too well.
Yeah.
So easy to get caught up in the fear and excitement of the market. But as they say, time in the market beats timing the market.
Exactly, and that leads nicely into his final point, which is to remember that investing is a marathon, not a sprint. Be patient, be consistent, and focus on the long game.
So to recap, Peterson's advice for navigating the Canadian market in 2025 is to stay informed, seek professional advice when needed, stay disciplined, and remember that it's a long-term game. Those are some really solid takeaways.
They really are, and I think they're applicable regardless of where you're investing. Now, before we wrap up, I wanted to circle back to Peterson's prediction about a weakening Canadian dollar. It makes you wonder, what opportunities could that create for Canadian businesses or those looking to invest in Canadian assets?
Yeah, that's a great point. A weaker Canadian dollar could make our exports more competitive, potentially attract foreign investment, and maybe even benefit certain sectors like tourism.
It's definitely something to think about. And that's what we love about these kinds of discussions. They spark new ideas and get us thinking about different perspectives.
Absolutely. So listeners, we've covered a lot of ground today. We've explored Peterson's insights into the potential ups and downs of the Canadian market in 2025, delved into specific sectors, and even discussed some key takeaways for individual investors. Remember, this is just a starting point. We encourage you to do your own research, stay informed, and make investment decisions that align with your own circumstances and risk tolerance.
Couldn't have said it better myself. And if you found this Canada News Summary helpful, be sure to follow, like, and share this with others who might be interested.
We appreciate you joining us, and we'll catch you on the next one.